Welcome back, everyone. Today's video is an update on the often requested enCore energy. enCore energy being one of the more ironic stories, for me at least, as I'll show throughout this video, but a uranium company of interest to me. So here's your update. Now, as always, before I talk about something that I own, I will tell you I own it. Disclosure, I own this one. It has become one of my larger positions, but that's mostly out of the lack of proficiency at rebalancing on my part. So as I said in the opening, this company has been a very ironic story for me, considering the name, because I bought and then it went up, I don't know, 50%. And then I'm like, should I sell? I reanalyzed, looked at it again. I'm like, no, you idiot, you shouldn't have sold. You shouldn't sell. You should buy more. But I didn't. I waited, went back down, bought more. And then the same thing happened again, except the second time when it went back down, it was in March and I was focused on some other things. But anyway, that happened again. Then, just as I was making this video, actually, I made an outline along with a few others and I was going to narrate it. And then news hit and I had to change basically a lot about the video because, as you'll see, it's completely different from what it would have been. And then news hit. And again, I had to change the video. So I will talk about what the news items were that I think made a big change and then another change. So originally when I looked at enCore, I saw, okay, the team, the guy, if you will, behind Energy Metals, which if you don't know, that went from 1 or 2 million to 1.8 billion when it was sold. Again, was it lucky? Probably. There was probably definitely a degree of luck in the last uranium bull market. But he's been right for a while and he seemed to have success last time. Maybe he knows what he's talking about. Originally, I'm like, okay, he may be worth a shot. Do some more work, do some more looking at it. Okay. And then I saw, okay, there's lots of potential here. And even this is after it moved up a little. I looked at it, there's a lot of potential, very small market cap, and the point that made me decide, no, I shouldn't sell, should have maybe bought more, was that it had an extraordinarily low burn. And as I spoke about in the Bannerman video, you can't have a tiny company that spends a ton of money because if you're early, you're just wrong. And that was always possible. It was always possible it could take longer. If you look to a number of things I've said, particularly with regards to looking at Cameco call options for 21 versus 22, it could always take longer. So with the low burn and this potential, I really liked it, and that's what made me decide to buy more the second time. Now, I don't know if they'll succeed. I know we can't ever know if someone's going to succeed. They could have a great track record and they could fail. So we can't know. But my thought was, even if they didn't succeed, there's a ton of value potential for speculative value, I guess you could say, if the cycle turns and people start looking at shopping for assets, even if they're not in production, that type of value, if you will. So they could not fully succeed and still be positive, and I like that type of outlook. So the first time, the outline of this video was going to focus on what the setup for enCore was and how it was positioning itself. And originally, the positioning that I saw, and again, all of these are subjective, but I saw more upside potential, less short-term risk, and very cheap. Now, we could argue what very cheap means, especially when the price moves up substantially, but that was what I was seeing the first time, but that all changed. Okay, so maybe not all changed. What changed was they increased the leverage. So they took the risk they ratcheted it up a notch, I guess you could say, because when they made that acquisition, I don't know if it's first or only acquisition. Well, it's not the only one, but when they made that recent acquisition, I'll say, they bought an asset that would burn more money, but could increase their value substantially. And I mean substantially compared to what their market cap was, if the uranium price moves and they can execute. Now, let's first talk about the uranium price moving. If you've been following my channel and what I've said about the uranium price, I am bullish nearer term, and now that doesn't mean necessarily tomorrow, but like within a year, highly likely within a year. So what they said while they were buying it was they said 12 to 24 months, they expect major changes in the uranium market. Perfect. I like that view. And so if the price moves in the near term, this could substantially benefit them. If it doesn't, it could make them a much less attractive investment because it increases their costs. Now you can see how that changes from where this video was going to say the first time. Because in theory, if you're if you're not bullish, you don't want leverage. If you're very bullish, you want a lot of leverage. Now, I'm not saying this is a lot of leverage, but I'm saying it's a step towards them getting bullish nearer term. And it's a big step considering where they were. Now before, and I guess still, there was a good amount of potential pounds in the ground value, unearthing or drilling out and proving what you have. Still is. One thing I was going to say, and pretty much an exact quote from what this slide was going to focus on before, was as the price goes higher, that's share price. As the share price goes higher, execution becomes more of the question. Can they for sure execute? And now, well, this is doubly true because they have, as I said, more relevant nearer term assets and more leverage. So the need to execute becomes substantially significant if because they added significant tremendous value potential if the price goes up and they have the chance to do something with what they added. If they don't, well, then it's just not very good, is it? Now, how did they respond to me making this subtle change in a preview to a video that they've never seen? Well, they proceeded to make the chief operating officer, the COO of the largest uranium producer in the US, recently at least, being Energy Fuels, they made their COO the new CEO. So they want to focus on executing in their operations. And this guy, this new CEO, has a lot of experience working uranium assets, operating uranium assets in the US. And it seems to me that someone like that wouldn't go to a junior that had no near-term production potential, if you catch my drift. So I'm liking that I'm on the same page as Energy Fuels. Now, obviously, I have their CEO, or sorry, their chairman and their CEO really have much more experience in the industry than me. So I'm liking personally that I'm thinking what they're thinking without knowing exactly what they're thinking. I'm just thinking I would do what they were doing if I was, forget about that sentence, it got away from me. Anyway, these guys, look at what they've done for the past decade. This is a strategy. I mean, it's a strategy that I would hope that more juniors would emulate in terms of, you know, if there's no reason to be bullish, if they don't think there's a reason to be bullish, don't spend money promoting the stocks for more people to spend money on the stock and so you can pay yourself more. No, they shut down as much as they could, saved as much money as they could for their investors. Because if you look at what these guys have done, the actions, they don't like risk. Look, should like you can look at this acquisition. Should they have done this heading into the 232 investigation? I mean, if you thought there was going to be a very positive outcome, then you could argue maybe, but they didn't. Why? Because they didn't know. They didn't want to take the risk necessarily, and so they sat quietly for years because there was no reason to waste money, to spend money when the price of uranium was not going to go. So in that way, they've been right for almost a decade now. And many peers have burned through, I'm not going to go into names, but have burned through many times enCore's market cap in terms of promoting their stock so they could get more money. Whereas enCore, I just like that they have been patient and not wasted money. And I wish more places, more companies could do something similar. Anyway, the point is, hopefully they are emerging now at what hopefully proves to be a good time. Now, will it be? Who knows? We'll have to see. Will they be wrong this time? Will they be too early this time? I mean, too early is relative. I guess they're more patient than I was, so yeah, that's probably good on them. And so, yeah, that's what I'm seeing that I'm thinking and they're thinking that's kind of similar. Anyway, so there's still a lot of potential here at enCore Energy. I mean, they're at enCore Energy, I'll say. Um, they have the big ISR project. They have exploration assets. They have a number of near cash flow assets. They have the Group 11, which is the trying to basically ISR with a very eco-friendly material. You might want to have a look at that if that interests you. Um, it's early stages, so I don't think I'll necessarily talk about it here. They have many near-term cash flow potential, and well, the Westwater uranium acquisition gives them more permitted uh, processing facilities. So, I mean, permitting is the biggest delay in um, North American countries and Australia, I guess too. But many places, permitting is the big delay. And who knows? Maybe more M&A if they see some opportunities. We don't know yet. So I do want to point out before I begin the slide that good management is very subjective, very subjective. So in this case, when I talk about the value of a good management, I'm talking about a good management that knows how to optimize the value of their shares, knows what their shares are worth compared to peers, and knows what they're worth to themselves. Because, enCore Energy, and this is an example, it's a crazy, ridiculous example that someone joked about on Twitter, but the point is, someone joked, oh, enCore could buy Cameco. Well, they could by issuing shares because you have as many shares capital as you need. Will it happen? Absolutely not. But the point is, if you know what your company is worth relative to peers, a good management team can use that infinite capital that you have to buy cheaper peers. So if there's a company that has an expensive stock, well, they should use their stock to buy companies that have cheaper stocks. And so that is the big part for me for the value of a good management, and buying the Westwater acquisition with $2 million worth of shares compared to if it's successful, I mean, I think we'll look back and say, whoa, if it's successful, that'll be a very good acquisition. If it's a failure, well, obviously that's a bad acquisition, but we'll see in the end. But at this point, when it comes to enCore, if you think the management can execute, and if you think that now is the time to get more bullish about uranium, then there can be a lot of value here. If you don't, then don't buy it. I mean, that's basically the simplest way I can phrase it. Anyway, that's it for today. Thank you everyone for watching. Thank you all of you who have just subscribed or just watched the videos casually. That's up to you. Thank all of you who watch it right away and like it. And thank all of you who just watch it and are quiet. But anyway, do any of you have any funny or ironic stories about purchasing a uranium company or just about a uranium company or any company really? Because I'd love to hear them. I thought that this irony of enCore, enCore, enCore was a bit interesting here. But if you have anything like that, I'd love to hear about that. Hopefully, we could have some laughs. Anyway, I hope you enjoyed. Till next time, have a great day.